All right, everybody, welcome to the Sunday Outlook. It's been a while since I've been on here. I've had some things happen in my personal life that's pulled me away, but I'm back. I'm going to be trying to do these at least once a week on Sundays. I won't know what time. I'm going to try to do them around 3 p.m. Eastern. This session is being recorded. I developed a list of what I call hot pairs. They're pairs that are pretty reliable. They're pairs that are pretty consistent. And we're going to go over those today, and maybe we'll pull a couple wild cards if we can't find anything. If you're new to this session, my name is Riley Hunter. I am a construction business owner, a full-time parent, a dad, a husband. I also trade Forex. I've been doing it for over a year with consistent profits. And welcome to the session. Sit back and enjoy. Feel free to put any questions in the chat box. I try to get to all the questions before we end. Like I said, this will be recorded and uploaded into the FX group. All right. So let's get started. So right off the gate, I want to show you guys the setups that I use. Okay. So when you first come to a chart, let's just pull up a chart. It's going to look like this. What I like to do is I like to switch over to the daily. You can see on here that I'm on what they call the bar graph. I don't use the bar graph or the line graph. I use the candlestick graph. You can see right here we have one line. This is where current price is at. So first thing I do is I right click. I use Owanda. I right click. I go to properties and I go to show ask line. Now as you can see, it did not pop up. Oh, there it is. Wow, that's weird. Anyways, you can see this red line right here. What this is wherever I enter my trade, this is where I'm actually going to go in. So if I was to enter a sell right now, I would not pop my position at 77.85. I would pop it at whatever this is right here. I can't see it. But anyways, this is your price line. This is your ask line. This is where your spread comes in for you, those of you who are using brokers such as LMFX and Owanda. There's other brokers that have commissions. They don't use spreads. Next thing I do is I'm going to turn off my grid so it's a black screen. Okay. Then I'm going to switch over to my candlestick chart and I'm going to zoom all the way out till this little area is gray. Then I'm going to come in twice. Twice. Okay. I'm going to unclick this button right here and click this one so it brings it over. Now you can see my ask line. You can see my price line. I'm going to right click again and go to properties. I'm going to go to colors. My bar up is going to be lime. My bar down is going to be fire brick. My bull candle is going to be lime. My bear candle is going to be fire brick. The reason I do this, it's easier on my eyes for the chart. I don't like super bright colors. This is your preference. You can do whatever you like. I would recommend having your bullish candle a brighter color than your bearish candle though. The next thing I'm going to do is I'm going to go to indicators up here, insert indicators. I'm going to go to trend. I'm going to add 3 exponential moving averages. So I'm going to go to moving average. The first I'm going to add is the 800 EMA. Make sure it says exponential here. Apply to close. And I'm going to choose blue. Okay. Oh, sorry. I meant to do white. Your 800 is white. Okay. I'm going to add a second moving average, which will be my 200 EMA. Exponential close. That one will be lime green. Then I will add my other in EMA, okay, which is going to be my 50 EMA. Then what you're going to do is you're going to right click on your screen, go to templates, save template, put the name in here and hit save. I already have this one saved, so I'm actually not going to save this. I'm actually going to close this pair. As you can see, I have the exact same setup right here. So let's go ahead and just jump right into it. Okay, when I start marking up my charts, I always like to go to the outer structure. So I either go to the monthly or I'll go to the weekly to find my outer structure, the most current pattern I can find. So as we can see right here, oh, the other thing is if you're just starting, you want to have these tools up here on your toolbar, okay? You want to have your trend line, your horizontal line, your vertical line, text, rectangle, ellipse, Fibonacci, and text labels. So if I have to take a break, guys, I'm sorry. I'm home with my two little kids, so I might have to attend to them just momentarily, but we'll see what happens. So what we're going to do when you first, if you're new, when you draw your trend line, it's going to look like this. It's going to shoot clear across your screen, okay? This drives me nuts. I don't like to put a trend line on here, start here, and have it shoot clear across. So what you're going to do is you're going to double click till the boxes show up, right click, go to trend line properties, parameters, and unclick the ray box. That's going to bring it down. So now you can decide how far you want your trend line to go. So let's go ahead and bring this back down where I wanted it. And you can see right now that we are in a downward trend line, okay? Your USD is on a downward move. It has been struggling at 113,000 for weeks and weeks. This is all weekly candles. Right now it's 1.12981. Okay, so our outer structure is obviously we're in a what they call a descending channel or descending wedge, depending on who you ask. So that's going to be my outer structure at this moment. Then I'm going to come down to the daily, and I'm going to see as well what's going on. So as we can see, we have, once again, we have 3 touches. I'm going to go ahead and draw these up. Okay, it's come down to our outer channel right here. Let's see. We have this one as well right here. So what I'm doing when I'm doing this is I'm setting parameters for price, okay? I'm setting parameters for where the market has come to and where I think it could come to again and potentially reverse either from a long to a short, but that means long is buy, short is sell. Okay, so now I'm going to come down to the hourly and I'm going to start looking for patterns. Okay, right here I can see that we've had an impulse in the market. Okay, this was one just huge correction right here. What I mean by impulse is this candle obviously was an impulse. Then what it did, it went into a correction phase of what they call an ascending channel. Okay. Then what happened again was it broke impulsively to the downside, had a small correction that usually lasts between 4 to 6 hours. Okay. These are strategies that I've been learning over the last 2 months. So this may be different to some of you that have been on here with me. So we had a small correction right here that lasted 1, 2, 3 hours, broke through on the 4th hour. Okay. My current mentor, Mark Hutchison, he has been teaching me that basically these corrections last through data and tons of back testing between 4 to 8 hours on average. You can see this one was 1, 2, 3, 4, 5, 6, 7, 8, 9, and then it broke through on the 10th hour. So we're looking for impulses, corrections, an impulse down, a correction, an impulse down, then it had a larger correction. It is what we call an ascending wedge. An ascending wedge is a reversal pattern to the downside. You can see it's ascending, it's going up, and look what happened. An impulse down. Okay, right now we are in a corrective phase of 2 patterns. We have a descending channel, okay, which is also a corrective channel for a reversal to the upside. However, inside this channel, we also have what they call an ascending channel as well. Okay, we're going back up. And we're coming to the top of the descending channel. So as you can see, we've marked patterns, okay? These are flags and channels. What we're waiting for, or what I'm waiting for on this pair particularly, is for, oh my goodness, all these buttons. I'm basically waiting for the market to come upwards of this area and bring back down. Once it breaks, okay, our first area, go to the daily. Oh, I forgot one channel. This very sharp ascending. Okay. The 90% probability on these channels is that the market will retrace or break through to the original part of the most current channel, which would be this one right here. So for me on the hour, sorry, the 15-minute, what I would do is I'm looking for, when it breaks through here, the first place is a short return of 30 pips to this area, the 1.1276. However, on a larger scale, we're looking for a drop to around 1.11714. Now, this is probably super confusing for a lot of you, okay? So this is not what I wanted to show you. This is just a sneak peek of what I've been learning, okay? This is a much more technical way of trading. And as you guys know, I'm into mainly triangle patterns and channel patterns and candlestick formations. So let's go ahead and erase this and let's get to a method that's much more simple to understand. So that'll be more of an advanced class, but let's go ahead and get to what I call the market outlook. So as you guys know, some of my favorite patterns are triangles, descending triangles and ascending triangles. Okay, one of those is right here. Okay, if we mark these off right here, you can see that the market has come multiple times to this area. Came down, was rejected, broke through momentarily, came back above. Rejected. I mean, it just rejected for weeks and weeks, came down momentarily, broke through, came back up and rejected. Right now, we're currently sitting at the rejection area. And if we draw a trend line to these touches, okay, we have what they call a descending triangle pattern. You can see, if I was to put a line right here, you can see it's more like a wedge, like a door wedge that you put under a door frame, okay? The theory behind this pattern is once this breaks down through here and retest, it should roughly go the length of the back end of the triangle, which is right here. Okay, so we're looking at roughly, on a larger move, on a longer trade, roughly 500 pips. Now, as you can see in the past, though, it's broke through here. It's broke through here. And it had a large break through here, okay? So on average, this pair, once it breaks, has been coming within this zone. Okay, so once this candle breaks through and retest, my first area to take profit would be roughly 100 pips, is what I would be looking for. Okay, my stop loss would come 25 pips above this 1.12967 line, 25 pips above it, and my first take profit would be at the bottom, which is 1.11961. Okay, now remember, these support and resistance zones are exactly that. They are zones. They are not perfect. They are not the end all. You need to understand that the market has zoned within these two lines. So according to history, sorry, let me get a little lower, 1.11839. So according to history, this pair, but as it gets closer and closer, you guys, this is what's so exciting about Euro USD at the current time. There's a lot of people saying that it's on a long-term buy. Okay, when they say long-term, I mean, you're talking, it's got to go through your 50, your 200, and your 800 just to get back up to create a double top. My theory is this pair has been struggling. As you can see, if we go to the monthly, lower highs, and lower, except for this one, lower lows the whole way down. I mean, it's obvious it's in a downward trend. So my projection on Euro USD for the upcoming week is we're on the daily. I'm going to switch down to the 4-hour, and you can see a little bit of the movement better. Right now, it has broke through and retested this area. Okay, so what I would do is I would hit the 4-hour. So the markets are going to open in about an hour and a half, roughly. I always recommend that you don't trade on Sundays because the volatility in the market is just so unpredictable because of the previous week. The other thing you want to do is go to forexfactory.com and see if there's any major news releases for the euro or the US dollar. Okay, if there is, just wait until it's over with so that you can have more of a predictable, so to say, environment with the Euro USD. But here's what I'm getting at. If this next candle opens and closes below this 1.12967, I would put my stop loss above the most recent high. I'm more conservative. You always want to do at least a 2-to-1. So I would probably go above your 200 and your 50 4-hour EMAs, which puts you at approximately a 40 pip stop loss. Your first take profit would be to structure, which would be down here, which puts you to 113. So you're almost a 3-to-1. Okay. And I would wait. I would wait and see what happens. Now, this is not financial advice, you guys. If this doesn't work, if you take the trade, it doesn't work out, don't come blame me. This is just what I'm looking for. Remember, if you take this trade and you lose, that means I took this trade and I lost. Okay? Always remember that. I was part of a company previously that had signals that would go out. And it never ceased to amaze me when people would call or text or message or reach out to the people who called the trades out and say, you know, you blew my account. You did this, you did that. And here's the bottom line. It's your decision to take the trade. We're just giving you our outlook of the market for what we see it. Proper risk management, you shouldn't blow your account. Okay? If you have a $50 account, don't trade a 0.05. Trade a 0.01. Yeah, you may not get a big return, but if you win, it shows that what you did worked. If you have a $1,000 account, don't trade a 0.5. Trade a 0.1 or at the max a 0.2. That's my recommendations, okay? So once again, we're looking for this next candle on today's market in about an hour and a half to open and close. Bare minimum to close below this 1.12967. I would put my stop loss above the 50 and the 200 EMA, roughly at 1.13424. My take profit would be down here at 1.11840. So there's your USD for y'all. Okay. So like I said, it's broke through, it's retested. Wait for this candle, bring it for it to come down. It may not come straight down. Okay. During this time, you're going to have what they call corrections, which are these right here. Okay. Impulse correction, impulse correction. So just according to this pattern right here, we're still expecting another impulse to the downside. But it may come down, correct back up, down, correct back up, down. As you move into profit, secure pips, you guys. You know, when I first started, my philosophy was every 10 pips, I'm moving my stop loss 5 pips forward. Okay, so once you're in profit, every 10 pips, 10 pips in profit, I would go to break even. 20 pips in profit, I would go to 5 pips in profit, my stop loss, and so on and so on and so on. Okay, so there's your USD. Let's go ahead and jump over to GBP USD. Let's find our outer structure, as we can see right here once again. Oh, wait, see, I'm reverting back to the way I've been learning. Let's just stick with the patterns. Sorry, y'all. Okay, so what do we have here? Off the gate, I see we're in an upward channel. That's very clear. We're actually in an ascending wedge. Sorry, that was my wife dropping something in the background. We have an ascending wedge pattern, which is a reversal, okay? 90% probability. When it breaks, we're looking for a fall roughly to this area. Okay, let's go down. So what we're looking for, impulse correction. We're looking for what I'm looking for is a break. Right now, you can see below here, we have our daily 200 and our daily 55, okay? Right here at the bottom, if I zoom in, you can see we're right at this two really strong EMAs. We're currently in an upward momentum. We do have this channel correctly right here for the moment. I'm expecting this to move up before it moves down. So let's jump to the 1 hour and see what we got going on. So as you can see, we've had an impulse to the upside. A correction on the 1 hour. So what I see happening is we have, okay, and remember guys, this is just my opinion, okay? Don't call me and sue me if you lose some trades. So we have an ascending channel currently on the 1 hour going up. We also have somewhat of a ascending wedge. We have the candlesticks are moving in upward momentum. So what I would want to see is for this market to move upwards of this area, okay, upwards to this outer channel, and then start to make its way to the downside. What we want is a break of this channel, okay? 90% probability. The first area I'd be looking for it to go to would be to this outward channel, simply because that is on the daily chart, okay? This line is this channel right here. That line I just showed you is this channel right here, okay? So if we go back to the 1 hour, that's this line. So if it breaks this area, it's going to hit this double, what they call a double top right here. You can see it created an M formation. It comes down, breaks this area past the 200, the green. Okay, this is what they call a risk entry trade. You can take your trade here, move your stop loss 20 to 30 pips above, and hope for it to fall down. That's called a risk trade. Now our limited risk entry trade would be at the break of this channel, 20, 30 pips above this channel stop loss. Your first area of take profit would be this daily channel. Okay, your second area of take profit would be the 90% probability of this ascending wedge here. Okay, your long term is going to be down here. Okay, so I'll show you in the daily. Your long term is here, roughly at roughly at 127670 is long term. Your first area of take profit I would be looking at, if you do a risk entry at the top of this channel, roughly at 132382, your first area take profit, I would go to around 131594. If you do a limited risk entry at the break of this channel, I'd put a pending order about 4 or 5 pips below this channel, which would roughly be 131560. Let's see. If you do 131500 is a pending sell. As it moves its way down, that would be your limited risk, and your first area of take profit would be roughly 130700, and then down from there. Okay, that is my prediction on GU. I'm not a genie, I'm not a fortune teller. That's just what I'm seeing. Any questions so far, guys? Any questions? If you do, please put them in the chat box. Any questions at all? Before I get too far ahead of myself. Okay, if you guys are all following along, drop a 1 in the chat box, please. Good turnout today, guys. Good turnout. Adrian says 1. Okay. Oh, someone drew. Someone's drawing all over the screen. Please stop drawing on the screen. Thanks. Can you explain Moreno, the significance? Yes, Nitro will be recorded on the moving averages. So when I was taught moving averages, what I was taught was that basically what it does, it takes data. So say, for instance, say it's the 200 EMA. Excuse me. Basically what it does, it takes back data. It's what they call a lagging indicator. Okay, so it's based off of historical data. The majority of your indicators, your RSIs, your Bollinger Bands, your EMAs, your MAs, your stochastics are what they call lagging indicators. Now, I always recommend, guys, the information I'm giving you, go research it yourself. You may find something different, and you can educate me, but this is what I was taught. So what it does, a moving average, it takes the back data of support and resistance for the last, let's say the 200 EMA, the last 200 candles, okay? And it gives it a moving level of support and resistance to the markets. So if you have an EMA that's based off of 200, that can be a very strong area of support and resistance for the market. So if we go to the daily, I'll just show you real quick. You can see that when the market has come to this 200, is rejected, rejected, rejected. Okay, there's also a strategy that you can use when it breaks the EMA and retests. It also counts as a breakout strategy. So all EMAs are moving, and exponential, what it does is it holds tighter to price. Just the moving average is more loosely with price. Exponential is a heavier weight on price action. So hopefully did that answer your question? Cool, cool. Okay, so let's go to EJ. Let's see if we, oh, yeah, no problem. So right off the bat, what I see is we had an impulse to the downside. Can you explain setup the SP before the trade revised? What is SP, Samuel? Let's see. So as we can see, we had an impulse to the downside, a correction, an impulse, and a correction. And now we're currently in an impulse. As far as EJ, let's go to the weekly. This is a trade I've been following for a long time, and here's the reason why. I don't know what stop plus means, Samuel. I'm not sure what that means. Stop plus. I just want to see something with EJ really fast. Oh, yeah. So as you guys know, one of my favorite patterns is a symmetrical triangle. Oh, this is nice. Sorry, guys. I'll tell you what I'm doing here in just a second. So EJ, I've seen this plenty of times before. I've actually taken this trade quite Oh, stop loss. Okay, Samuel, on the replay, I explained that. Just watch the replay and we're done. All right, brother? So symmetrical triangles is currently one of my favorite patterns. Okay, as you can see, if I put a line here, you can see this symmetrical triangle shape. Can everybody see this symmetrical triangle shape right there? If you can, put a 1 in the comment. Yes, okay. Okay, so the theory of symmetrical triangle, cool, everybody's saying yes. Okay, the theory behind the symmetrical triangle is just like the ascending and descending triangle. Once it breaks, okay, this has been on a downtrend. Okay, well, currently it's on an uptrend. But the current market is moving down. Okay, this was our move up. This is our correction down. We have a high here, a lower high, a lower high. We got to bring back up, which is still lower than the original line. And it's just continually moved down. So theory is, once this breaks and retests, we should, in theory, see a drop down to roughly from where one line can be drawn straight down to meet the other one. It can't be here because there's no wicks for the lines to attach to. So it's got to be from here to here. And this is roughly a 1800 pip trade. Now this is a very long trade. Okay, we're talking long term. But if you go down to the daily candle, okay, you can see that we've also got a symmetrical triangle pattern on the daily. So we have a triangle within a triangle. Right now, price is currently below all 3 EMAs, okay? Which means right now it is currently in downward movement, which we saw from the weekly. Sorry, let me delete these. So right now it's broken through the daily. What I would want to see is a retest to the upside and then a drop to this outer structure line, which is still looks small, but it's 148 pips. We're on the daily chart. So what I would be looking to do is I would come down, since we're on the triangle for the daily, drop down to the 4 hour, and we can see it's already started to draw back. Okay, so I would be watching my 4 hour candles. And I would be watching for this candle to come within 10, 15 pips of our outer structure of the inside triangle daily, which is right here. So you're looking roughly at 124,900. 124,900. Once it got there, I would wait for a close and open below where I would take the trade, or I would put a pending order here with my stop loss 25 pips inside the triangle. Okay. But you want to be watching for candle formations. Okay, as you can see, it did come down and break the triangle here, but then it shot right back up. Okay, it shot right back up, then it shot back down and shot back up. So this is where support and resistance is good. Okay, we can see that right here, the market has come to this area multiple times on the 4 hour and been rejected. Okay, but it's currently below that area. Okay, so if it comes up, hits and retest, I'll be looking for a short down to this outer weekly triangle. That's what I would be looking for. Oh, UJ, huge impulse to the downside. Huge correction channel, ascending channel. It's broke through. Currently below the 800 EMA on the daily. So what I'm expecting from here, you can see we had a minor correction after an impulse to the downside here. and the impulse down. So I would be looking on lower time frames for a correction, which we're starting to see right here. So as you can see, we had a correction here. So I'd be looking for a correction to occur throughout here somewhere, roughly in this area, and then a break to the downside. Okay. The original structure, as you can see, 90% probability is right here. But sorry, one sec, guys. Sorry about that. My daughter brought me her tablet. How to get it going. So yeah, UJ, I'm looking for a correction within here and then a break to the downside. I probably wouldn't look at that trade as of right now. So I'm just going to move on. UCAD. 3 touches. Have a double top. So a risk entry on UCAD. This next candle, I would wait for it to close below the outer trend line. As you can see, we have formed a double top already with 1 point being here, 1 point being here. This is an ascending double top. Okay. The rule of thumb is basically it moves down, breaks this, what they call the neckline, this area right here. It should move the length of the top, which is roughly 153 pips, or match your left leg down here. So my risk entry would be to wait for the next candle to close inside this trend line, and I would take it to the neckline or my 50 EMA. Okay, that would be, depending on where it closes, roughly 124 pips. My limited risk entry would be, I'd have a pending order. Well, I would wait, I'd have an alert below the neckline. So when it broke through, it alerted me. And then once it closed below, I would take it down to my 200 EMA, which is roughly 114 pips. This is a trade that I'm going to be looking at myself for this upcoming week, simply because of the amazing formation, the double top. It's a pretty stellar setup right here. I love these double top points. I may open a very small lot size as a risk entry, and then if it breaks below the neckline, I will move my stop loss into half profit on my first trade. I will open a second position after it closes below my neckline. Okay, make sure you are watching this replay. Okay, look at this number on the side when I do this. This is the number for the neckline, roughly 13286. Okay, my area of take profit will be this channel, which is 131823. That is a limited risk entry. Your risk entry is a candle that closes below this outer trend line down to this, okay? You're on the daily chart. You want to draw this trend line. It's easy. You go to the highest point of your chart, which is right here. And it's your first, second, third touch. That's your that's your trend line. Your upper trend line. Okay. Your lower trend line is going to be from the highest point of your chart down 2 points. 1, 2. That's where your lower trend line starts. Kiss the second wick and go straight out. Look at this. Watch the replay. This is where this is one of my main pairs I will be focusing on this week. Okay, you're looking for an overall risk entry trade for a potential of over 200 pips to create that double bottom. If it breaks, okay, if this breaks the lower channel, you're looking for a much higher trade, roughly 500 pips, you guys. Okay, but once again, let's actually jump over to Forex Factory real quick, and let's see what we can find on Forex Factory. Okay, can you guys see my Forex Factory screen? If you can see Steve, can you see my Forex Factory screen? Shake your head, yes or no. No. How about now? You guys see my Forex Factory screen? Yes. Cool. Okay. So as you can see, today there's no news, high impact news. Monday, there's no high impact news. Tuesday, we have the consumer confidence. Okay. Previous was 131.4, forecast is 132.1. So it's expected to be positive news. It's obviously, it's the consumer confidence basically is showing the financial confidence as consumers, buyers in America. So you can come into here and see what exactly it says. So if you're going to take a risk entry trade, say you decided to take it today at the close of a 4-hour. Okay, let's go back over to our chart. Okay, can you guys all see my chart again? Okay, so if we were to jump down to the 4-hour, okay, let's take this box out so we can see. Okay, if you were to take, so we've got our neckline marked, okay? This is our neckline of our double top. We know our double top other point is here. This is the start of a double bottom on the 4-hour. If you're going to take a risk entry, understand the name of that trade. Risk entry is a much higher risk trade, which offers a much higher reward. It has a higher probability of not working out, okay? Because a true double top is not formed until it breaks your neckline. Say you were to take, you were to wait for the close and open of another candle below this outer trend line. The first point of news is Tuesday morning for the US dollar, okay? If you are in profit, secure profits, okay? If you are in profit, secure profits, okay? If it breaks through and keeps going, okay, your next area, your next time to be watching for news is we have the Canadian high impact news coming out Wednesday at 6:30 a.m. my time, which is 8:30 a.m. Eastern time and 10 a.m. Tuesday Eastern time is the US, okay? After that, the next US news is Thursday, the final GDP. After that, it's Friday, Canadian GDP. So you have, if you decide to take a risk entry, you have 2 days, today and tomorrow, to secure profits. That is your risk entry. Or you can just simply wait till you can simply wait until this trade breaks the neckline. Okay. We have had an impulse to the upside on the 4-hour with a descending channel, descending wedge. Okay, which is a reversal to the upside. Okay, so we want to see what happens during this correction right here. This may move like this for a minute. This may move out of the channel. Okay, if this moves out of the channel, okay, let me see if I can. Tell me if you guys can see my drawing. If this correction moves out of the channel, that's okay. Can you guys see my drawing that I'm doing right now? Okay. A lot of people are taught if this moves out that this has got to be an opportunity for a buy. Okay. But this could also correct, hit this channel, correct like this, and move to the downside. Okay. Here's the thing. If this corrects like this to the upside, moves out of this channel, okay, that is an ascending channel. That's an extension of a correction, which means an ascending channel is an indication of a reversal for a descending move. Okay. So, like I said, if it moves out of this channel, watch for it to do something like this. Draw your bottom trend line, draw your top trend line, and wait for the break to the downside. Now, here's the other side of that. If we have a correction that goes like this, okay, that is a descending channel. Just like right here. What happened? Impulse to the upside. A descending channel or a bearish flag is a reversal to the upside. So be watching for those. Okay, those are tall tail patterns of where this market may go. Like I said, I will be watching this pair and I will be keeping the group updated on what I see for this. And last but not least, GJ. Last but not least, GJ. We are currently at the daily 255. It looks like it's trying to form what they call a morning star pattern. If this is a bullish candle, it will most likely come up to this area. So let's draw some stuff, shall we? Those two recent touches. We definitely have an ascending. Impulse to the downside. Impulse to the upside. Correction. Impulse. Correction. Impulse, 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 correction, downside. So we have a touch to the ascending trend line. You have your 50 and your 200 EMA here. You have your indecision candle after a bearish candle. One sec, sorry guys. So, in my opinion, I believe that this market is going to move higher at least one more time. If it opens above, if it closes again, let's go to the 4 hour. Okay, so you can see we've had an impulse to the downside, the correction. Okay. If this pair breaks above this flag that it's created, sorry. This is an ascending wedge. So this is an ascending triangle. So what I'll be looking for is this. If it closes above this area, I'll be looking for a retest to the upside, depending on how it breaks. My heart is telling me, because of these patterns, which is an ascending wedge and also an ascending triangle, which is also an ascending wedge in a sense, here, here. What I would like to see is for this pair to break through this area, the 200 EMA, and down to this side. I would wait for a short 4 to 8 hour flag pattern, and then I will be looking for a drop. Okay, as we spoke of before, the long-term 90% probability is in this area. If it breaks this channel right here, it's going to be a good trade, in my opinion. Keep saying in my opinion, because this is not financial advice, guys. This is just what I'm seeing. So guys, there will be a replay of this. Is there any questions? Do we have any questions before we jump off? We've been on here for a little while now, for about an hour. It's good to be back with you guys. It's good to be given a little bit of education again. Like I said, I'm going to be trying to be on here at least once a week, every Sunday. If I do see something in the markets throughout the week, I will jump on and do a quick update video. Is there any questions you guys have before we jump off? This will be recorded. It is being recorded, and it will be uploaded to the group as well. No questions? Samuel, how can EMA be used to trade? So I'm not even going to give advice on that, and here's the reason why. I use EMAs as an extra level of confluence, as confirmation. You know, it's used as support and resistance. Well, okay, I will tell you one way. Like I said before, one way I was taught was on the daily. Is you can use EMAs, the 200 specifically, as a breakout trade. Okay, so for instance, let's see, where's some good examples? Prince, one sec, NZD, ooh, those exotic pairs, man. So for instance, we had a breakthrough here to the upside of the EMA. It came through. See, none of these are really. Yeah, in all honesty, Samuel, I wouldn't use EMAs to trade on their own. I could tell you some ways, but I just what number and the red and blue EMA? I don't have red and blue EMAs. I have the blue is the 50 exponential, the green is a 200 exponential, and the white is a 800 exponential. So honestly, Samuel, I would just use EMAs as added layers of support and resistance. You can, if you want to, you can trade on the breakouts of EMAs. I don't recommend it, but that's one thing you can do with them. And crossovers as well too. I mean, like I said, I don't recommend crossover trading either. We had someone requests, let's see. I don't trade NZD CHF, but I will take a look at it for you to see if I can see anything. You said you see a sell. Yes, it is possible to trade with having EMAs. It's just not very reliable in my opinion if you do it just basically solely off EMAs. Okay, so on the weekly, let's get our outer structure. Daily. I have an ascending wedge. 1 hour. So here's my opinion on NZD CHF. So right now, if it does happen to break below here, yes, I could see a sell, but you have your daily 200 EMA directly below it. So it'd be a short-lived sell, potentially, because that is an area of support at the moment. What I would honestly wait for, well, if it breaks that, I mean, your 9% probability is only to here, which is basically to your 200 EMA. If you're looking at roughly 43 pips, if that's the kind of trader that you want to be with 43 pips. I would honestly wait. Let's see. Gosh, I hate these other pairs. Yeah, I see a sell on NZD CHF. I can't really specify when to where, how long. I mean, we've got your 800 on the 4 hour here. We do have an ascending channel. I honestly, I mean, I can see why you see a sell, but I just don't. The only sell I would really see, because it does have this huge exhaustion wick, would be the break of this channel right here. And then, you know, you would hope that it breaks down past your 200 EMA and comes down to your outer structure about 180 pips. That would be my first area. Well, my first area, if I was to take that trade at the break, would be here, which is roughly 66 pips. Then it would be this outer structure, which is 192. And then the 9% probability would be the beginning of this channel. So take profit area 1, take profit area 2, take profit area 3. It is on an ascending channel, which is the sign of a reversal. But you got to be careful to make sure that it's not in a correction phase and then dropping. Okay. All right, guys. Thanks for attending. I appreciate your time. And have any questions, send me a Facebook friend request. Let's connect. Let's talk. And I'll talk to you guys later.